Good afternoon. Today is Wednesday, December the 7th, and the time right now is 11:50, 10 minutes to noon. And overnight on Wall Street, we see continuation of the technical pullback that we saw since last Friday. And yesterday was no different. The market went even deeper. The high traded this round was 34,595 in the Dow Jones itself. We have seen that the Dow Jones, when we draw this support line, we have seen that it has clearly been quite pivotal. The market actually broke and then went back up to test, couldn't get back into the support line, now become resistant line, and the market actually came down from there. And over the just because of this factor, there are two schools of thought. One is that the market has already peaked and it's getting ready to resume its downtrend. Now, the other thing is, of course, there is the possibility, which I mentioned at the beginning of the week, that every year about this time, especially 1 week before Christmas, there will be a Santa Claus rally. So this is still a possibility. This week, the market pulled back. Like I said, the fund managers are doing the rebalancing of the book, and they're doing window dressing. Next week will be the window dressing period, in which they will start to pick up depressed stocks, especially those tech stocks, so to repopulate their portfolio. So basically, the possibility of another bounce going into the week before Christmas is still very much a possibility. But whatever the case, the top side, okay, is again seems to be quite limited. So I would not recommend to continue to look for buying opportunity, although there is possibility of a short-term bounce. But the risk is disproportionate because this market downtrend may have still be in play since the drop from the beginning of the year. So I'm a little bit skeptical about any upside potential. I'm more concerned about the downside risk. So be very careful going forward as to trading equities, especially US equities. So yeah, this is my view right now. Okay, so S&P 500, we also saw that there is a technical breach of a very short-term technical this support line. Last night it took out this support line, and the market came very, very close to my original target, was 4,118. The market high this round on Thursday, last Thursday, was 4,100.5. So we can see that the market came very, very close to my ideal target price. Nothing is perfect in this world, so the market is did the three-wave rebound and then came very close to my target and then broke a support line. So these are technical signs that tell me perhaps the market may have already peaked. Any more further upside potential is actually quite limited in my opinion. So I will rather stay aside and observe rather than decide whether I want to go back in again, because this is already almost a year and not much of an incentive to go back in again. Okay, so moreover, next week we have the FOMC meeting. It's going to be pretty volatile, and because it's the festive season, trading volume could be impacted negatively. So be very careful trading into the year end. So over at Nasdaq 100, we can see that this market is very, very sluggish. We have a three-wave rebound, and this rebound at 12,115, which is the best it could do this round, since the market bottoms out in the start of October at 10,440. So the market has bounced back to 12,115, very far away from the September high of 12,740. And of course, yesterday it also broke a near-term support line. So that gives me the idea that for Nasdaq especially, the top side is really, really limited. So do not try to venture into the equity market if you can afford to do it. Okay. Over in Asia, we can see that the optimism about China relaxing its zero COVID policy has actually been the catalyst that caused the Chinese stock market to actually maintaining its very persistent rally over the last week. So we can see that so far today, we have seen the Hang Seng go back to 19,600. It's getting very, very close to my objective target of 20,000. So 20,000 is still a possibility. Even if we reach 20,000, we are still a little bit distance away from the August high. So I think 20,000 is a very round, convenient number. So maybe the market may gunning for this 20,000 level, at least in the short term. Okay. Over in Shanghai Composite, of course, the factors that cause the Hang Seng market to actually bounce is the same factor that caused the Shanghai Composite, generally speaking, Chinese equity, the red chips are actually maintaining a very positive outlook. But you can see that, especially in the Shanghai Composite, we can see that this three-wave bound has come to my target. My original target was 3,226. The market came out to 3,224 this morning. So it was in my opinion, this is as good as hitting the target. Okay, don't need to be so precise because trading is not a precise science. Okay, so we have seen this market actually rebound three-wave and came to this area of prices, which I have been telling you guys, which I believe is going to be the area of resistance. So in the market now, all we need to do is look for the possibility that this market break this support line, and that will be the confirmation that we need that the market has already picked. So in the meantime, this is something that you have to take into consideration if you are trading Chinese equities. Over in the Nikkei 225, we can see the Nikkei 225 continue to decay, very much in line with what we saw on Wall Street. So we can see this is a three-wave pullback. Of course, at the beginning of the week, the market actually took out this support line and then went back in again before it slides back yesterday. So today we can see prices are still low, testing the Monday's low. So we can see that negative, hopefully this area of prices between 27,534 to 27,800 can actually hold the market. But if the market takes out the 27,500, then of course the market is hitting possibly lower. Okay, so do keep that in mind. Over in the currency market, we can see that the dollar does appear to be pretty firm. Okay, we can see this dollar rebound from the most recent low at 133.60 seems to be holding up pretty well. Yesterday, the market did not come, was very, very stable. There was no big movement in dollar yen. So that give rise to the idea that the market may still have some more upside potential. And if it still want to rally, I think the 140 will be a very convenient level to aim for, because this is the nearest stop. Okay, 139.90. Okay, so do watch out for possibly an extension run in the dollar. Then if the dollar is going to be strong, of course, we are talking about the other major currency will have to come back down. This round, we can see that the sterling itself is high at 123.44. And then now we have seen a three-wave pullback, getting very close to the near-term support line. If the market takes out this near-term support line, it could be heading to 1.177. Okay, so okay, 1.177, 1.1780 lah. Okay, so basically, I think this is about 300 pips potential. So if you see the market breaks this line here very convincingly, which is this support line, then maybe the market is going to hit to 1.1780. So do watch out for this. And over in the euro dollar, I think the potential for euro dollar is even bigger than sterling. Yes, at the same time where sterling actually peaks shortly after the euro dollar also peaked at 106, okay, 106 even, and the market is now pulling back what looks like potentially a three-wave pullback. And if it breaks the same thing, the support line here, and I think the market may actually decay all the way to parity. So based on where the price is right now, about 0.4670, we can see all the way to parity. That's more than 400 pips. So when you compare that to sterling, to the cable, I think cable maybe have about downside potential of 300 pips compared to euro dollar about 400 odd pips. So I think no need to choose. If you have the choice to trade either one of these, then maybe the euro versus the dollar is a better bet, because the downside potential is a lot more by at least 100 pips. So do consider that. Okay, Aussie dollars is also just broke a support line. And the funny thing is that yesterday the Reserve Bank of Australia actually hiked interest rates, okay, by 25 basis points. Now the current rate of interest in Australia is 3.1 from the previous 2.85. So one day after the high interest rate, currency fallbacks. Of course, it's also dependent on this morning. We have the report of their GDP. Australian GDP actually rose less than expected, but it is a good number. The market has, on a year-to-year basis, especially, this is the best third quarter we have seen. Okay, almost 6% compared to the previous 3.6% in Q2. So even that cannot cause the Aussie dollars to rally. So if good news cannot cause and the subclass to rally, that means there's underlying weakness. So based on that, if the technical outlook is weak, then maybe we should go with the technical. Okay. Euro versus the Canadian is a bit of a dilemma. Okay, on the one hand, we can see that this market wants to rally, especially after this massive rally on Monday. But yesterday the market was very, very. It still goes up, okay, but it was a little bit more restrained, giving rise to the idea that it is struggling. Okay, then this morning we saw at a high of 136.75, there was this reversal pattern, very small one. Okay, so that maybe is a clue, okay, based on the 4 hours time frame. This could be a clue that the market is struggling. So if the market cannot hold and breaks 135.70, which is this red line over here, 135.70, if the market cannot hold and break this level, I think the market is going to go down to test the 134. Okay, 134 will be the next bottom for this run, I believe. Okay, so do watch out. So it's a bit of a mixed bag. While dollar yen, I think there's still potential for the market to go to 140. That means the dollar can still go up against the yen. But if the dollar against the Canadian is struggling and wants to come back down, so that is exact opposite of the strong dollar narrative. So take it with a pinch of salt. Go with the price action. Okay. Currently, I have no position. Over in crude oil, before going to yesterday's move, before going to this week itself, there was still the possibility that crude oil prices may actually hold. But last night, the market was very, very weak. Continued to drop 2 days in a row from $83.34 drop to $73.41 this morning. So it's a drop of $10 in just 48 hours. So this is a bit of a kicker. So basically, I was long going into yesterday's trading. Okay, I bought 2 positions around here, and the market continued to slack, and I was stopped out. So unfortunately, this trade didn't work out. So in the meantime, there is possibly the continuation of this weakness going forward. Not sure where the market is heading. Maybe it's heading for $65. So maybe another what? $10, $9 drop. Okay, so do watch out for this move. Of course, the catalyst has been, since the beginning of this week, the EU has actually imposed a price cap of $60 per barrel for Russian crude export. So that is hanging over the market. Okay, and then of course we have the OPEC Plus meeting that was done on Sunday, which they're going to maintain their production cut quota. So a bit of a mixed bag. I think the catalyst will be China. If China continues to open up because of the relaxation of the zero COVID policy, market analysts believe that if China goes back to some kind of normalcy, maybe factory can start to operate again, businesses can go back to some kind of normal operation, maybe the demand for energy will return. And if that's the case, then energy prices could be supported. So we have to watch. Okay, so this is currently what's happening. Maybe there's a little bit more downside to the crude oil story. Okay, over in gold market actually hit a high of $1,810 last week, and then it has a sharp fall on Monday. And then we can see yesterday the market was struggling. Okay, and I was already long gold. Okay, I have 2 positions that I wanted to get in. Order number 1 was done. Order number 2 was still pending. It's just under this this level here. So basically, I'm trying to see whether I think the market still have potential to rally. My bullishness of the precious metal market stemmed for the fact that because November 27, which is the last expiration for the futures contract in COMEX, have seen quite a bit of trading activity, and most of this expiration ends up in delivery, especially for silver. So typically the December futures on every year, the December contract is always the most heavily traded contract, and we want to watch how the January contract expires on December 27, means the day after Boxing Day. So I do believe what we saw on November 27 is possibly going to be seen again in December 27, in which most of the futures contract, when it expires, will end up in delivery. And that may cause the market to go up, because I've been mentioning this for quite some time. COMEX warehouse stocks for precious metal is actually very low, because it is not a traditional market in which speculators will insist on delivery. Traditionally, it has always been London, but the London market is very, very tight. So speculators have shifted the focus on COMEX, and there's a lot of price suppression in COMEX, and because most people are short, including the big bullion bank. So maybe we can see a bit of a short squeeze if the demand for delivery, is the same as what we saw in this in the last delivery period. So do watch out for this move here. I do believe that between gold and silver, I think silver is a better bet. So that means that both is going to be bullish. Okay, for silver, the market high was $23.52, and it has pulled back yesterday to test this recent low here at $22.05. So it basically held up. So I'm thinking if I have a chance to buy silver, maybe I should. Okay, so this is something that you want to consider as well, because the tightness in the silver market is more pronounced compared to the gold market here. Over in crypto, we can see crypto is basically still struggling. There is no major move that we saw overnight in crypto trading, especially in Bitcoin. We can see Bitcoin has a three-wave rebound. The highest traded was 17,425, and the market broke a near-term support line, and now it's struggling. So there's a possibility this three-wave rebound is over. The market has already seen its peak, and it could be heading lower. And the fact that it took out a minor support line reinforced my belief that market is more to the downside than the upside. And if this is the case, I think the market may actually go down and test the lower end at 16,000. So 16,000 could be calling next. Okay. Over in Ethereum, same thing. We can see a three-wave rebound, also breaking a near-term support line. You can see that this is a three-wave rebound. Hit my target. My original target was 1,307. So last Thursday, we can see a high of 1,308, which technically says that my target has been hit and the market has been struggling since. And last night it broke a support line. And if it's the case, I think the near-term support will be 1,200 to as low as $1,150. So between these two prices, I think somewhere the market will stabilize. Right? Over at Ripple, I don't think there's any much difference. Ripple right now is going into a possibly a triangle, okay, or even a flag here. So basically, we do not know how the ultimate pattern is going to be like, but basically it is doing a consolidation. So I'm quite neutral, and as far as Ripple is concerned. Okay, Binance Coin is also going into a consolidation, but because of the initial run up from about $250 all the way to $217, this rally here is pretty strong. So what we have seen since then, the market is struggling, and I think it will slowly drift down to this price here at $275. Once you get into this price, it becomes very attractive to position long, because I think the structure suggests that maybe there's another leg higher. So if this is the case, maybe the upside could be anywhere between $340 to $350 for all I know. So we have to see how things develop here. The market actually drifts down to 275. Start to look out for buying opportunity. This is all I have for you for today, because the market is actually quite tame. There's nothing much different from the other token coins. Okay, so I will see you again tomorrow morning, and in the meantime, take care. Bye bye.